This morning, we've got our eye on Hevia board, which makes particle board and ready-to-assemble furniture. Hong Leong Investment Bank Research is keeping its hold call on the counter and cutting its target price from 65 cent to 58 cent. Hevia board last closed at 55.5 cent. HLIB says it met up with Hevia board recently. Some key takeaways: despite seeing a strong demand for its ready-to-assemble products, Hevia board is having difficulty scaling up its production due to the prolonged labour shortage amid the border closures. Meanwhile, its particle boards segment is currently running at about 85% utilization rate, with production lead time of about 45 days. According to HLIB, the company is still progressively raising its selling prices to withstand high raw material costs, which seem to have stabilized, at least for now. Among its ESG initiatives, it recently acquired a 33% stake in PV company Satra Megajuta, through which it has installed a 1.48 megawatt solar PV system on the rooftop of its ready-to-assemble factories. It has invested over 500,000 ringgit in FY20 to upgrade its workers' hostel and periodically conducts voluntary screening of its employees for COVID-19. In terms of outlook, HLIB says it continues to see near-term headwinds to Hevia board's earnings recovery path since its factories can't operate during the FMCO as they are deemed non-essential, and of course the labour crunch. So should the FMCO be extended further, the continued closure of its plants will thwart its earnings recovery. The research house cut its FY21 forecast by 46.3% to account for the loss of annual capacity due to the FMCO. However, it believes downside to Hevia board's share price will be cushioned by its healthy balance sheet of net cash 38 million ringgit. So what's the consensus? According to Bursa Marketplace, there are two holds on Hevia board. Average target price 61 cent, still nearly 10% higher than the stock's last close of 55.5 cent.